Okay, so yesterday we talked about a particular news event. We went to Forex Factory. I hope we started using Forex Factory, guys. You should start using Forex Factory so that you can follow what's going on. So yesterday we had this there was this ISM services. We mentioned it during the class we had. During the class we had, we said the major event we have yesterday is actually ISM services, right? And this actually moved the market very significantly. The dollar began to massively sell, sold off massively once this news was released. Okay, so that's what we call economic events. Today, this morning too, we had this AUD cash rate. I was talking about the cash rates, FOMC, anything that has to do with interest rates or cash rates and all of that yesterday, right? And then this morning we had this AUD cash rate. You see, AUD cash rate, AUD ROBA statement. You see, so this morning the Australian bank, the Australian National Bank, raised interest rates, right, this morning by about 35 basis points, about 0.35%. And then when you go to the market now, let's look for AUD USD. You see what I'm saying? You see this massive, huge candle, this huge green candle. That was what happened when the news event came out. This was a massive buy. It was over 63 pips, over 60 pips. This happened at the time that news event was released, right? So that's the thing whenever these events happen. So we have to keep our eyes on the world events, like I said, and the economic events. Okay, so that is one way of looking at the market, and we always need to keep an eye on that. It's very important. It has the ability to change the dynamics of the market per time. You see, so you can have everything going well. What we are going to start talking about now is what we call technical analysis. Now, but technical analysis is something that it has to do with chart analysis, looking at the chart, understanding what the chart is doing in order for you to use it to trade. But if you take your eyes away from fundamental analysis, you take your eyes away from what's happening in the news, and you only focus on chart analysis, you will be surprised sometimes. There are times you enter a trade that is perfectly fine, perfectly normal, perfectly okay, and then it goes against you. And the only reason it went against you was just because something happened in the news that you did not keep an eye on. You know, something happened in the news. For example, Euro USD yesterday was giving us signals that it was going to sell, right? It was giving us signals that it was going to sell just before that news came out. It was giving us signals that it was going to sell. But immediately that news came out, and it came out at 50.0. Look at it here. Okay, that was yesterday. So it came out at the previous for the month. I explained all this yesterday. Previously, we had the previous data for last month was 51.9. Then the forecast, analysts and economists always do those forecasts. We explained that yesterday. So we had 52.6 for the forecast. And then when the data itself actually got released, it was 50.3. So when that happened, the dollar collapsed, the dollar fell. It made the dollar to sell immediately the news came out. But then at that time, Euro USD, for example, began to buy, gold began to buy. Gold began to buy, Euro USD began to buy, and several other currency pairs began to buy at that time. But the question is, at that time that buy started happening, Euro USD was selling, was setting up for a sell. It was setting up for a sale. In fact, people who were in a sell on Euro USD at that moment were already in profit at the time this news came out. But when this news came out, it just changed everything. Euro USD started buying, right? So that's why you want to keep an eye on what is happening in fundamental analysis, even when you are trading technical. Okay, so that's very important. I'm hammering on it so that you think you have it in your mind. There are many people who think, oh, everything is about technical analysis. When I come to the chart, I understand support and resistance and all of the jargons and terms you use to explain and analyze when it comes to technical analysis. You think that's the end of it, but that's not the end of it. Okay, a fundamental news event can just change everything, and you're wondering, did I make a mistake with my analysis? It's not like you made a mistake with your analysis, but it's just that you needed to keep your eye also on the news, what was happening in the news. So technical analysis is the second way of doing analysis in the market. And basically, what's analysis? Analysis is basically understanding an approach, getting an approach with which to look into the market. Okay, you want to take a trade, right? And we've said that a trade is either a buy or a sell. Okay, so how do you know where to buy? How do you know where to sell? That's what analysis is all about. Okay, and we said before that everything you see on this chart, look at these candlesticks, look at this chart right now. Whatever you have here are called candlesticks. So you see the red ones, you see the green ones, they are all called candlesticks. So we have the bullish candlesticks, we have the bearish candlestick. The one that are bullish means buy, you know, bullish means buy. So if you're in the market, these are some of the terms you understand. Bullish means buy. So if you see a green candle, that is a bullish candle, which means a buy candle. Is a green candle, which means that price appreciated in that period of time. So you have the red ones, those ones are called bearish candles. Bearish candles. Bearish equals sell. Bearish equals sell, right? Okay, so that's what you have to understand about it. Now, every data you see here, every candlestick you're seeing here is giving you data. Data, and it's historical data. That means data that has passed already, but it's telling you what happened in the market previously. What happened in the market previously. And you want to understand what happened in the market previously, because if you understand what happened in the market previously, there's a tendency for you to be able to understand what's going to happen in the future. Okay, so when it comes to weather forecast, when it comes to the tools like a thermometer used to measure temperature, what data do all of these use? Okay, so that's the same thing. It's analysis too. It's basically you're looking at the data that you have. What data do I have? If you have a tool like a thermometer that is used for measuring temperature, what data is it going to feed in? So there's data that will be fed into it, and then there's the output that will come out, which is the reading on the thermometer, right? So you're going to take the data, which is the temperature of the environment, feed it into the thermometer, and then it outputs the current temperature of the environment of the room, right? It's the same thing. You want to be able to look into the market, look at what has happened in the past, what happened in the past, and then you'll be able to use that as data for what is likely to happen in the future. Okay, and that's what analysis that's what fundamental technical analysis is all about. Fundamental analysis has nothing to do with what happened in the past. No, it's all about the data that is being released at that time. Look at what I said. This is AUD. We're on AUD USD right now, and then this green candle happened. This green candle happened within the space of a few minutes. I can tell you that even though we are seeing this candle on the 1 hour, let's go to 1 hour right here. So let's go to 1 hour right here. You can see this candle looking very large compared to the other candles here, looking very large. And the reason it's looking very large is because of that news event that happened. So for fundamental analysis, please mute yourself. Thank you. So for fundamental analysis, you don't need to know what's happening in the market. You don't need to look at historical data, nothing like that. Okay. If you don't know how to do analysis and you just know how to take some risks that make sense, you can make money with fundamental analysis. But when it comes to technical, you need to know what's going on in the market. And the truth is that the opportunities that technical analysis gives you is actually much more than the one fundamental analysis gives you. Right? So you might have one fundamental news event for a week. You may not even get a fundamental news event that moves the market in a whole week, right? Because when we come to Forex Factory, for example, look at Forex Factory right now. This is yesterday. Let's look at today. Okay. So today now we have AUD cash rate. AUD cash rate is the only news that we have today. and it happened very early in the morning. This is 5:30 a.m. GMT +1. That's when this news happened, right? Now look at the whole day. You don't see any significant event anymore. So if you were sleeping at this time and you are a news trader or a fundamental trader, you were sleeping, you slept off during this time that this news happened, you have no other opportunity to trade. You may not have any other opportunity to trade for the whole week. That's the thing with fundamental analysis. And even then, there are some times that this news event will come out and they will have no significant impact on the market. You see, it will you may just go through a whole month or two, go through a whole month or several weeks with not one trade. You will not get one trade that you can take and say, okay, this is the trade I took and I made profit. That's the thing with fundamental analysis. But with technical, if you understand how to read the charts, understand the market, you'll be able to, you have opportunities very frequently. Now, it may not be every day that you have opportunity to trade most of the time, but you will have opportunity to trade almost every week. You have opportunity multiple times a week. There are times the market is moving the way you anticipate it, and then you have so many different opportunities in the course of just one single day. See, but that's only possible with technical analysis, not fundamental analysis. Okay. So now the first concepts you want to begin to understand when you come to technical analysis is understand the concept of roofs and floors. The concept of roofs and floors. So let's go there. Let's talk about that. So roofs and floors. Roof, floors. Okay, so you begin to understand the concept of roofs and floors. Now, because the market has to do with roofs and floors, and I will start to explain it in a moment for you to understand. So when it comes to roofs are also called resistance. You will hear this often, resistance, and then floors are also known as support. Roofs are called resistance, floors are called support. Okay. Okay. So roofs are called resistances, floors are called support, right? So now think about where you are sitting down right now. You are in this class and you're listening to me right now, right? You're in this class and you're listening to me right now. And then where are you sitting down right now? You're likely sitting down or you're likely standing. You're likely in a room somewhere. You are likely somewhere right now that is a house. If you are not on the road, you are in a house. Definitely. You could be in your office or in your shop or in your house, wherever you are right now. There is a floor where you are standing or where you're sitting, whether you're upstairs, whether you're downstairs, whether you're on 3rd floor, 5th floor, 10th floor, doesn't matter. You are somewhere right now. You are currently sitting down and your feet is on the ground. All right, your feet is on the floor. So that floor where you are sitting down right now, when you take, and then also you have a floor there, right? Now above you, there is a roof. Wherever you are right now, there is a roof, some kind of a roof. Okay, if you're in a story building, you probably have a hard roof, right? A concrete roof above you right now. If you're in a story building, you have a concrete roof above you right now, and then you have a concrete floor below you right now, right? So now when you take a ball and you smash it on the floor, you hit it on the floor, the tendency is that it bounces up, right? It bounces. When it bounces, what happens? You hit it on the floor, it bounces, it goes off the floor. Okay, that is the concept of support. So the idea is that when price hits a floor, a support, it bounces, which means that when price gets to a floor, it buys. Okay, so let's begin to demonstrate it a bit. Now, look at this. So we'll take this as a roof. We'll take this as a floor, right? So we'll take this as a roof, and then we'll have a floor as well here. So you have a floor here, right? So you have a roof and a floor. So this is like a house, okay? Now, if you're sitting on this roof, you're sitting on this floor, sorry. You're sitting down, you're sitting on this floor, and then this roof is above you. So if you take a ball and you hit it here, what happens is this. You find something like this. You find out that the ball will bounce up. If you hit it very hard, and the floor is a normal floor, the normal floor of a house, when you hit the ball very hard, let's say a tennis ball, okay, or a volleyball, or even a football that is very firm. When you hit it on the floor, it's likely to bounce up, and when it gets to the roof, what happens? It will start to come down again. It will hit the ground again. When it bounces, it hits the ground again, like that. It keeps going up and down. It keeps going up and down like that. Okay, it goes up and down. It goes up like this, then it comes down, then it goes up, then it comes down like that, right? That's what it is. It goes up, comes down, goes up, comes down, goes up, comes down, just like this, just like what was appearing on your screen right now. Okay, so this is what we call a roof. So this is a roof. This is the roof, also known as resistance / resistance. Okay, then floor. The roof is also known as a resistance. Then a floor is also known as a support. So let's make that support. Floor support. Okay. All right. So now this is the idea. When you understand this, you understand the basis of technical analysis. If you understand this, you understand the basis of technical analysis. This class is an introductory class, to basic to technical analysis, right? So once we have gone through this class today, I'll have the link in the group. I want you to go over it again. We'll continue in the next class and in the next class, but I'm going to explain this in such a way that you can go over it and understand it as much as possible. So when you understand this, like I said, this is what technical analysis is based on. This is the basis of technical analysis, the roof and the floor. The technical analysis, the roof and the floor, the support and the resistance. That is what technical analysis is based off of. Now, there are several other things beside it. But eventually, as we go deeper and deeper, you will understand that everything is about roofs and floors. How do you know where to buy? Remember, when price gets to a floor, it tends to buy. When price gets to a floor, it tends to buy, it tends to bounce, just like a ball. A football bounces off a floor. That's how price gets to a floor and then bounces off. When price gets to a roof, it bounces off and sells. So the concept there is that when price gets to a roof, it tends to sell. So sell means that it came from a higher point to a lower point. Sell means that it came from a higher point to a lower point. Buy means that it came from a lower point to a higher point. So if price is selling, it's coming down. If price is buying, it's going up. If price is selling, it's coming down. If price is buying, it's going up. Okay, so now think about it. When price hits a roof or a resistance, it sells. When price hits a support, it buys. So if you want to buy now, you are looking for, we've said that profitability in the market is knowing where to buy and where to sell, right? Now, if knowing where to buy and where to sell is what makes you profitable in the market, so where do you want to buy now? You want to wait for price to get to a floor or a support before you buy. It's as simple as that. So if you wait for price to get to a floor or a support, then you buy, then you are likely to make profit. You're likely to have price going in profit when you buy at the floor then when you are likely to have price going in profit when you sell at the roof. At a roof is where you want to sell. At the floor is where you want to buy. That is the concept behind it, and that's where you want to understand. So when we say, when you enter a trade, when you are thinking about entering a trade, you're asking yourself, what is the nearest roof? What is the nearest floor? Okay, what is the nearest roof? What is the nearest floor? Now, there's something you have to understand. First of all, of course, eventually you get the whole picture. But first of all, you want to come into the market and understand what we call trends. A trend is the direction the market is going per time. Okay, after you've understood the trend, then you now come to where is the roof and where is the floor? Where should I be buying? Where should I be selling? Okay, so now this is what you're looking for. Where should I be buying? Where should I be selling? Where should I be buying? Where should I be selling? If I buy at a roof, if I buy at a floor, the tendency, the chances of the probability that my price is going to move in my favor is very high. It's probably 80%, 70, 80%. Okay. Now, if I sell at a roof, the probability that my price is going to be coming down and go in my favor is very high. It's excellent. Okay, so now that's what you have to understand when you are thinking about where to buy, where to sell. Otherwise, you will see trading as something like gambling, because sometimes it goes up, sometimes it comes down. Where does it go up? Where does it come down? You see, so that is it. When you start to understand where it goes or where it comes down, then you start to understand that it's actually not, it's not really gambling, and it's something that you can basically understand how it works. Okay, so always remember, like I said, the concept of roof and floor. The concept of roof and floor. Use where you are sitting down right now. Where are you sitting right now? Where are you standing right now? You are not in a vacuum right now. You are not in a vacuum right now, or you are not suspended right now. You are not in a suspended state right now. You are currently standing somewhere or sitting somewhere, right? So think about, always have that in mind. Then the next thing you will notice, in the market is that at a certain point, the whole market is basically roof and floor, resistance, support, resistance, support, resistance, support. But you'll notice that at a point, this resistance and support tends to get broken after a while. After a while, that support will break. And then when that support breaks, it becomes a resistance, which means that if a floor is broken, it becomes a roof. So this is the way it works. So when price breaks out of here, so this is what technical analysis is based on. So that's why we're explaining this. So you see this, then it continues down. You see? So what do you see here right now? You see that price broke out of this support or floor, and then it turned the support or floor to a roof, and then it came to another support or resistance. This is another one. See? So the market is a series of support and resistance, support and resistance, support and resistance, roofs and floors. It's just a series, up and down like that. But at a certain point, the floors and roofs tend to be broken. When they are broken, what happens? Price will turn that floor. Remember, this was a floor before. When price was still here, you can see price was here, this was a floor. But at a point, the floor got broken, right? It got broken right here. The floor got broken here. So once the floor got broken, you see that price turned that floor to a roof now. The price now turned it to a roof. It's more like when you break through something. Let's say you're trying to put your you have how do I explain this now? Let's say you're able to push something into like a bottle. You push it out, put it into a bottle, and then you're trying to come out. Because it expands, it cannot come out anymore. So think about it. You break through a roof, right? Or in this case, a floor. You broke through a floor, but then price is trying to get it come back there again, but it cannot go back into that floor again. The floor is now acting like as a suspension. The floor is now acting like a roof. It's now preventing the price, because it's broken. This floor is now preventing price from continuing continuing to go up. So you see price has a tendency to come down after breaking through a floor. Okay, now the same thing happens for a roof. Let's look at this now. The same thing happens for a roof. So price breaks out of this roof, right? So when price breaks out of this roof, so tendencies that it will do this. So it does that, and then it moves to another roof. So from what you see now, the market is just a series of roofs and floors. But at a point, price does get broken. Price does get, the roofs and floors does get broken. And when they get broken, price moves to the next roof. Price moves to the next floor. So this is the reason, this is the only caveat when it comes to support and resistance. So we would have just said to you, see, anytime price gets to a support, buy is guaranteed. Okay, is guaranteed. When price gets to a roof, buy. Okay, when price gets to a roof, sell, guaranteed. When price gets to a floor, buy, guaranteed. Now, the only thing that is not, that makes that guarantee, that removes that guarantee, is the fact that there are times where this will be broken. Okay, so this is one of the reasons why when we trade, we use a stop loss, because we understand that there are times where we expect price to buy from this floor, because we know that price is supposed to buy from a floor, right? Price is supposed to buy from a floor, but we understand that there are certain times when price gets to that floor, it will not hold, it will break the floor and continue coming down. And so in order for us not to lose a large amount of money, we use what we call a stop loss to prevent our loss from becoming substantial. You see? So if you look at all of this now, everything is beginning to tie together. We talked about risk management before. We talked about a whole lot of things that have to do with risk. We said when you come into the market, you want to think about risk first before you think about reward. Risk over reward, risk before reward. Now, when you have taken care, the reason why you want to do that is when you think risk before reward, you are able to maintain a healthy risk appetite, a healthy risk profile before you think about reward. Okay, so when you think about reward, you know that you've taken care of your risk. You know that you're not going to lose all your money on a trade. Even if the trade goes bad, you're not going to lose all your money. So what you want to do now is calm down, right? Maintain your risk, maintain a proper risk management, then you now go for profit. And then we talked about that earlier, right? So this is the concept behind technical analysis. Now, there are a lot of other things we're going to be breaking down in the future, but this is what technical analysis is about. So it's basically roofs and floors. Price moves to a roof, it sells. Price moves to a floor, it buys, right? But at certain times, roofs are going to be broken, floors are going to be broken. And when a roof is broken, price moves to another roof. When floor is broken, price moves to another floor. It continues like that. It just continues like that in the market. So when you come into the market, the first thing you when you come into the market, you want to start to look for these common areas, these areas where you can draw basically horizontal lines, or beams like this, horizontal beams like this, and you begin to see different parts of the market touching the same point. Okay, you come in now, you draw a horizontal, and you see that this point, this point, this point, they all hitting the same area. That tells you there's a support there, there's a resistance. Of course, in the future, in subsequent classes, we're going to show you how to do that, how to understand that, how to mark up those places very well, and then how to know the best places where you should be entering a trade or where you should avoid entering a trade. Okay, so those are the things about this is introduction to technical analysis, right? So this is where you want to start from, understanding technical analysis, and then from here we'll begin to take it deeper. Okay, I'm not going to let this class go beyond this. I'm going to stop it here so we can go over it again and help and understand this better. All right, we'll proceed we'll move it to the next level on our next class. So do we have a question? Who has a question and would like me to explain that question?